we're one of the few countries where, yes, we've been crushed, but also not really, right?
Yeah,
And the economy's still been growing in a sense. And I think
sure.
because of that, and it shows the strength of our economy, or the quote unquote strength, right? Um, and I think because of that, the Feds will probably end up saying like, hey, we're still going to just maintain where we're at, because it's not, and nothing's really slowing down. And
Mhm.
what we've seen, like overall, just transactions and everything wise, there hasn't been a real tick
Yeah.
down just because of the range of rates we're in.
The economic numbers are coming in hot and heavy in the next 7 business days. Tomorrow, we get the BLS, Bureau of Labor and Statistics job numbers for May. Next week, we get CPI, headline and core. And not to be outdone, we get a Fed rate decision, plus, I believe, a dot plot. So I want to ask the boys from Convoy Home Loans. That's a whole bunch of stuff. Which one of those things caught your attention? Which one are you guys watching?
Well, all of them are going to be important and will have some sort of influence, whether it is up or down on rates or treasuries. But I think the most common answer from anybody that follows mortgage rates or the market in itself is going to be, of course, inflation. Depending how hot or weak or strong that number comes in, it's going to have the biggest ability to change rates in terms of point one or point two or even point five, who knows, right?
Yeah. Yeah.
The other two can't really do that, at least just because we kind of know what the Feds are doing, and job reports are still going to lead up to, inflation numbers next week.
Yeah, it's pretty wild to think about, especially when you step back and realize that both Bank of Canada and the ECB cut rates in the last 36 hours. And more importantly, both of them have inflation still being a problem. In Europe, they actually increased their inflation expectations for both 24 and 25, but they still cut. And in Canada, their shelter inflation is still running at 6% plus. So both of those institutions said, hey, we're going to cut anyway. So does that add any pressure to the Fed to cut, you guys think?
I think that historically speaking, for just I'm talking in the recent history, we've seen that Powell sticks pretty strong to what he says he's going to do.
Yeah.
And I think that despite that happening, obviously with them, their economies were being crushed, right? And the rest of the world, actually, most economies were being crushed in the last like 2 3 years, right?
Mhm.
We're one of the few countries where, yes, we've been crushed, but also not really, right?
Yeah,
And the economy's still been growing in a sense. And I think
sure.
because of that, and it shows the strength of our economy, or the quote unquote strength, right? Um, and I think because of that, the Feds will probably end up saying like, hey, we're still going to just maintain where we're at, because it's not, and nothing's really slowing down. And
Mhm.
what we've seen, like overall, just transactions and everything wise, there hasn't been a real tick
Yeah,
down just because of the range of rates we're in, right? So
yeah.
yeah.
It's funny when I look at the next 7 days, or I guess 6 days, because I think it comes out next Wednesday. I actually think the dot plot is the most market moving for me. So let's walk through those and we'll end on the dot plot. So tomorrow we get the jobs report. Not that it means anything, but both the JOLTS report and the ADP report were soft, meaning below expectations. The last several months, the ADP report and the BLS have been completely opposite. So who knows what that means? But I think there's a lot of people starting to think the job market is truly breaking. So we could see a weak number tomorrow. What do you guys think?
Yeah, I mean, I think you kind of caught my attention as you were going off, and I I would probably change my answer, knowing that there is a dot plot coming out. Is that for sure coming out next
Yeah,
Wednesday?
it
The
comes
dot
out
plot.
June. Yeah, June.
Okay. Yeah. I would argue then that the dot plot could probably influence what happens to rates more so than inflation. Just because that's always going to be what I believe traders are looking at
Yeah.
based on what Feds are voting or putting their confidence in what's going to happen to rates. Um, but I may have lost you on what the question was regarding jobs coming out tomorrow because you got me sidetracked.
No, it's all right. It's my bad. My bad. I threw a right turn or whatever. I think the market is set up for a weak jobs number tomorrow. We've seen treasuries really sell off, or actually rates come down in treasuries because of this soft JOLTS report, right? 8.1 million openings when they're expected to be 8.3 million. We saw an ADP report, significantly missed to the downside. The Fed arguably wants, or no, arguably, they want a more balanced job market. And I think there's a growing trend that may be occurring right in front of us. So I think the market is set up for a soft number tomorrow. And we get something particularly soft. Let's ask it this way. Expectations 175. Let's say it's a massive miss, like to 125. What I think happens is that brings a September rate cut discussion front and center. And if it's ugly enough, might bring a July rate cut front and center. Is that reasonable if it's that ugly?
I think it is, but I think like Dustin said earlier, inflation still is going to play into it, right? So into the decision that they make. So I think that even though jobs may come out that way, we've seen it happen before where Powell just kind of holds, right, and says we're going to continue to watch, whatever metric he's watching, right? And recently it's just been inflation, and even with the let's say bad jobs report or soft jobs report, he might still say, well, inflation is still at the number above our target number. So, we believe that the soft jobs report is actually going to kind of level itself out, and fix itself over the next, month or so. But inflation is still going to be our number one target. And I think that that's a real comment that he might make, because that's what we've heard time and time again from him every time he speaks. It's like, hey, I know this came out bad, but like inflation's still up. So we're just going to not look at that number right now, and we're just going to look at inflation, right?
Yeah.
And he did that while the rates were going down. He did that while the rates are going up. So I feel like he might still hold steady to that tone going forward.
No, I think you're right. I think one thing Powell has been remarkably consistent. He's been wrong a lot, but at least he's been remarkably consistent. So let's fast forward. I think CPI comes out next Tuesday or Wednesday. I actually look under the covers, and you guys may know this, the audience may not. There's this thing called the base effect. The base effect is where it's a trailing 12-month calculation. We are actually rolling off a base effect that was essentially zero. So it's not a big one. So even if this inflation for month on month is pretty small, it's still going to be a plus. So my fear for inflation, CPI specifically, is it ticks up, just given the way it's calculated. And I think if CPI goes up 1/10, that's going to be a problem next week.
Yeah, so I mean, what we're kind of telling our clients still, what our tune has been, regardless of what part of the market we've been in, because we keep talking about that rectangle we're bouncing around in.
Yeah.
Like, it always is better to just lock something and have it ready to go. That way, if the market moves one way or the other, you're still okay. Worst case scenario, we move the loan and close it with someone else. Like, there's a lot of options that we can do, but it's going to be better to have the options open to be able to lock and just, there's so much uncertainty in the next 7 days, like we're talking about. And, if CPI comes in higher and that's what affects rates, like it's going to shoot it back up to the top end of the rectangle that we talked about. I don't think it's going to go beyond that rectangle top, but we're going to be in that range. So if you want to get slightly lower and feel a little better about the rates, it's like, hey, watch this data, right? And if you're trying to buy something, move now, lock it in. And then if it gets better afterwards, then, move it. It's not a end of the world situation.
Yeah. At the end of the day, let's talk about the rectangle. I would put it between, say, 6.9 and 7.5. Is that kind of where you have it?
Oh, yeah, absolutely. I think we might even be able to, I think 6.9 is like a lower end of the candle, right? That it touches. I think where I would probably put it as maybe 7 to 7.6.
Okay.
Or sorry, yes, 7 to 7.6. Yeah,
okay,
because
that works.
I feel like that's kind of more where everything has kind of been jumping around. Because 6.9 is still attainable, but it's in most cases, it's a buy down, right? It's a little bit of a buy
points,
down.
Yeah.
So yeah,
I like it. Well, then we get to Wednesday, the Fed decision. Again, no rate cut, no rate increase. We get the Fed statement, hey, we're data dependent, all normal stuff. Then it's the dot plot. The dot plot for me, assuming I'm right that June is the next release, we're going to find out if any Fed presidents, like I think it's Susan Collins or I don't know, I probably had the name wrong. Somebody's talking about rates going higher. They're going to talk about how many cuts. I think the last time they talked was 3 rate cuts. That's clearly not happening. Are we going to talk 0, 1, 2? How low they're going to go? Lots of stuff in the dot plots coming.
Yeah, and it was interesting, last time, whatever it was, 3 months ago, because there were, what was it, 4 that said it's going to stay the same or go higher.
Yeah.
How many of Fed officials are we going to see in that same range of saying staying the same or going higher? That's really going to tip the scales, I think, for traders to look at, and probably influence rates the most is who says or how many Fed officials say staying or higher.
I like it. I like it. Well, let's switch gears. You guys announced, I think it was last week, might have been the week before, a very exciting 20% down DSCR product that is actually producing rates below conventional. That's not supposed to happen, but you guys make it happen. Tell us about it.
Yeah, so it's been beautiful actually, because obviously for the 20% down option, most of it follows the market. And now we're actually, whoever rode with us the last week, 2 weeks, they're closing at like 7.1, 7.2 on a 20% down DSCR loan with 2 to 4 units, right? Multifamily, which in conventional can't happen. It's not physically possible.
Just
Yeah, but we spoke about the difference in between, keeping the 5% LTV or, reinvesting it. And, we are seeing 20% down multifamily rates as low as, like, I saw one yesterday, client bought down 2 points, but it was at 7.1, right?
And this is an investment loan, folks, just so we know, those are usually in the 8s.
Yeah, investment loan, 2 points to buy it down, but it was a 7.1 on a 30-year fix, in which case, is it going to be worth it to refi to save maybe $50 or $100 in the next 2 years? Probably not, right? But it locks you in and allows you to kind of measure where you're going to be in the near future and in the long term. And I think it's more of a set it and forget it type situation.
Yep.
Rare window that we're in right now. So it's like we're really telling all of our clients to take advantage of that.
No, absolutely. And just so we're clear, I know the answer, but for the audience, these are 30-year products. We're not talking some strange 2, 3, 5-year arm, correct?
Correct. 30-year fixed investment debt service coverage ratio loans with 20% down.
Guys, if you want to get a part of this, you want to ask questions, see if your opportunity fits, how do they reach out?
Go to convoyhomeloans.com and let us know you came from ORaaT.
Folks, you got to tell them you came from ORaaT. If you don't, you're just going to be put in sub Q, and you're special. You want one of these guys to help you. So tell them you came from ORaaT, and they will do it. Thanks, guys.
Thank you.